Hi, Barbara Friedberg here. I'm a former portfolio manager and university investments instructor, and I love investing. I've been investing for decades, and I want to teach you the difference between a robo advisor and a financial advisor. I get this question all of the time, and I decided the best way to lay it out is to go over step by step. What is a robo advisor? What is a financial advisor? How are they similar? How are they different? And which one is going to be best for you? So let's get started. Now, robo advisors are everywhere you turn. You may have heard of Wealthfront or Betterment, M1 Finance, Personal Capital. These are simply automated online investment managers. And they typically appeal to new and younger investors, but I will tell you, some of them have so many great, sophisticated, advanced features that they are a great fit for older, wealthier advisors too. Robo advisors are not uniform. They range from very simple for fund portfolio, no financial advisor help, to very complex like the Personal Capital, which offers certified financial planners, digital investment management, individual stock investing, along with access to legal and estate planning help should you qualify. So how do you know which one to pick? How do you know which one is right? We're going to cover all this and whether you need or want a robo advisor, a digital investment advisor, or you want to go with a strict financial advisor. Now, the basic difference is fee structure. Robo advisors are typically lower fee than financial advisors. And we'll get into that in just a minute. So we're in the midst of 2022, and there have been a lot of market declines this year, and people are getting shaky, nervous, and scared, particularly in newer investors who just hit the investment markets in the past few years because they had seen nothing but up markets for several years, and now 2022 down. And it can be really frightening. So one of the benefits of a human financial advisor is you have someone to talk to. And typically what a financial advisor can do is calm your nerves, calm you down. But wait, that does not rule out robo-advisors because there are many hybrid robo-advisors who also have digital investment management and they have human financial advisors as well. We'll put a link to this article in the notes below. This is a partial list of the robo-advisors that also offer financial advisors. So back to whether you should choose a robo-advisor or a human financial advisor or a hybrid, which offers both. And let me just say, I have investment accounts with robo-advisors. I have an account with a digital Schwab robo-advisor. I have an account with M1 Finance. I put some close relatives recommended they go with Betterment, which also has access to human financial advisors. So clearly I'm biased. I like robo-advisors. So take my information with a grain of salt. You know, I'm leaning towards them. I'm biased by them. Okay, so robo-advisor is a digital financial advisor. Typically what happens is you will answer a few questions. Financial goals, how much money you have, what you are saving or investing for. Then they'll ask you some risk tolerance questions like, what are you going to do if the market drops? Are you going to sell everything or are you going to buy more or are you just going to sit tight? And from those questions, they will suggest a portfolio or a mix of stock and bond funds that are designed to serve your needs. Now, these are not etched in stone. At every robo-advisor I have reviewed, you can adjust the recommended portfolio. So don't freak out if they come up with an aggressive or a conservative leaning portfolio and you go, I don't like it. I want either more stock allocation, which would make it more aggressive, or I want more fixed or bond allocation, which would make the portfolio less aggressive and more conservative. So robo-advisors give you an automated investment portfolio, and then they all have a lot of different add-ons. Many of them offer tax loss harvesting, a variety of different account types, and many of them offer financial advisors, free tools, a whole lot of stuff. So I got to take a deep breath here. That's a lot of features and services in one portal. So what is a financial advisor? Typically, you think of a financial advisor as a human being who is trained in finance, investment management, financial management. Financial advisors have a laundry list of credentials. And before you choose a financial advisor, it's wise for you to look into what their education is, their experience, their credentials, how much they charge. Because let's just stop here for a minute. Fees are important. Financial advisors typically will charge a percentage of your assets under management. So if you have $100,000 managed with a financial advisor and they charge you 2%, well, what is 2% of $100,000? That's $2,000 a year. Okay. Sometimes, though, a financial advisor will just charge you a commission on different products and services that you buy. So you want to understand, what is the fee structure of the financial advisor? Then this question is key. Are they a fiduciary? A fiduciary is a fancy way of saying they are required by law to put your interests first. Now, that sounds kind of crazy because you would think, well, shouldn't all financial advisors abide by the fiduciary standard? And the answer is no. So these are questions that you can ask a financial advisor. What's your education? What's your experience? What are your credentials? What is your fee structure? Are you a fiduciary? And then find out if they've been in trouble. Use BrokerCheck. That is a resource that is free for you to check out any financial advisor to see if they've been sanctioned by the IRS or if there are any complaints against them. Here's a tip. If you check on BrokerCheck and the financial advisor has a lot of complaints, you probably want to look for somebody else. So, financial advisors also manage your portfolios in a variety of ways. Some financial advisors will actually use a robo-advisor in the background to manage your investments, while others will focus on differing strategies like buying stocks, like using options. So you want to understand what a financial advisor is. Now, one of the realities of many financial advisors are, oh, and I forgot, one other fee option for a financial advisor is some of them charge by the hour. So if you just need a little bit of help, guidance, and assistance, you can hire a financial advisor for a couple of hours and avoid the ongoing fee. Financial advisors are typically more expensive than robo-advisors. And it's important to realize that every dime that you're putting into management fees by a financial advisor, by a robo-advisor, by a fund management fee of an investment fund is not going into the markets to grow and compound your wealth. So fees matter. There's been a lot of research that has suggested lower fee investments typically give you higher returns. So now we've looked at what is a robo-advisor and what is a financial advisor. If you are confused, don't worry. There is a lot of overlap, but the keys are right here. We'll look at this handy, beautiful chart here. Low cost. Robo-advisors typically have lower fees than financial advisors. High minimum balance in general, and there's always going to be an exception to these rules. Financial advisors require a higher minimum balance. So if you're a new investor just starting out, you're probably going to go with a robo-advisor. Low or zero or low minimum balance. There are several robo-advisors that you can get into for 10, 20, 30 bucks. Acorns, M1 Finance is $100. SoFi Automated Investing is just, $5, $10, whatever you want to get started. Financial advisors are not going to serve you with a low minimum. Okay, personal contact. Financial advisors offer personal contact. Some robo-advisors do. Other robo-advisors do not. And that's where my handy list of hybrid robo-advisors, those with human financial planners, will be helpful. So if you want a robo-advisor that does offer human financial advisors, well, you can find that list right here, and I'll put the link down below. Can choose assets. So let's say you're a bit of an investor yourself, and you want to pick the assets, the stocks, the bonds, the funds that go in your portfolio. You can have that conversation with your financial advisor, and in many cases, he or she will accommodate you. Most robo-advisors, not all, and when finance does allow you to pick investments, Wealthfront allows you to choose investments, Vanguard allows you to choose investments. So there are robo-advisors where you can influence the investments. But in general, a robo-advisor is designed to be automated, is designed to choose the investments for you in line with your goals and your risk tolerance level. Robo-advisor is not going to have human error or bias because it's typically managed by computer algorithms with, of course, some human oversight. Robo-advisors provide automatic rebalancing. Robo-advisors also provide automated tax loss harvesting. And that is great for taxable accounts because it will reduce your payments to Uncle Sam. And this year, when all of our portfolios have some losses, tax loss harvesting is really going to come in handy. And I also have an article with robo-advisors that offer tax loss harvesting. For example, Wealthfront actually offers daily tax loss harvesting, which they say adds 1.8% to your portfolio returns. Then Got to get back on track here. Next and final section is active investment strategies. Financial, and what that really means is that active investing strategies mean that the robo-advisor will buy and sell investments based on market conditions and other factors. The majority of robo-advisors do not apply active investing strategies to any large extent. They may have tweaks with a smart beta type of investment, but in general, robo-advisors are passive investments, which means after you've chosen your asset allocation, your mix of stock and bond ETFs, the robo-advisor will maintain that through all different market conditions. Now, question, is that bad? Actually, no, it's not bad. It's actually quite good. And again, the science has shown that a passively managed investment portfolio that is in line with your specific risk tolerance level typically will outperform most actively managed strategies. So don't worry if actually you should feel very happy with most robo-advisor strategies that they are passively managed, because the research has shown that passively managed portfolios typically perform better than most actively managed strategies. If you want active management, though, in most cases, you will go to a financial advisor. So those are the basic differences. Now let's get into, how do you make the decision? Should you go with a robo-advisor? Should you go with a financial advisor? Should you DIY it, do it yourself? Robo-advisors are great if you're fee conscious because, like I said, most of them have very low fees. Many of them have no management fees. And that's pretty cool. You can get your portfolio rebalanced without management fees. And I do have an article about that too. Robo-advisors with the lowest fees. We've got that right here. Here are the cheapest and some free robo-advisors. We've got M1 Finance, Betterment, no management fee, Betterment low, 0.25, Wealthfront, 0.25, SoFi Automated Investing, no minimum, no fees. You'll get a link to this article as well. If you don't need handholding and you can feel okay with just having the confidence that you can handle the ups and downs that are inherent in investing in financial markets, this happens and it is a part and parcel. During the years since the stock market has been in existence, which is over 100 years, if there's been a decline, it has always resumed and picked up. So if you don't need a lot of handholding, you really don't need to talk to anyone. All digital robo-advisors are perfectly fine. Wealthfront happens to be my favorite for so many reasons, but there are many, many all digital robo-advisors that are very, very good. If you feel like you like the idea of a robo-advisor, but you also want access to human financial planners, there are many robo-advisors that give you that option. Some of them, like Betterment, they have financial planning packages that you pay a small fee for. That's the same with Ellevest. While if you have a larger portfolio at Betterment and at Personal Capital, then you get unlimited access to financial advisors. SoFi is unique in that they have no management fee. They have no investment minimum, and you can access certified financial planners for 1/2 hour appointments. So they are unique in that realm. SigFig, only 0.25 fee of assets under management, and all users get financial advisors. Schwab, I have the digital plan, which has no fee. The premium plan requires a little bit higher minimum investment, and they give you unlimited access to financial planners for a very reasonable subscription fee of $30 a month after you pay a $300 setup fee. Robo-advisors, of course, are also good if you don't have a lot of capital, because we've already talked about the minimums. Okay, so what are the benefits of a traditional financial advisor? If you've got a large portfolio and you need a lot of advice, and you also want access to other services that many traditional financial advisors offer, such as estate planning and legal advice, tax advice, you might want a traditional advisor. Although, like I said before, Personal Capital does offer all of those services at a specifically generally lower fee than your traditional financial advisor. Ellevest also, for their wealthier clients, does offer that wider range of services for wealthier clients. If you like meeting face-to-face, well, if you want to meet in someone's office, which, people do that, I guess, with the impact of COVID and the popularity of Zoom, It's probably less popular to meet in person than it was in the past. But if you want to meet face to face, then find a financial advisor within your town. And we also we'll have a link below to a service called Retirable, which will help you find a financial advisor. It's a really nice service that can find you a financial advisor that meets your criteria and your credentials. Now, Robo advisors, you can meet with them, the hybrid financial planners, via a video chat, of course. If you want greater control over your investments, in general, you'll go with a traditional financial advisor. So, that was a lot. So what's the bottom line? Which is going to be best for you? If you want low fee or free investment management, you're just starting out, you don't have a lot of money, you don't want to get into do it yourself, well, then you're a perfect candidate for a robo advisor. If you're older, you're wealthier, you've got a lot of complicated financial needs, then you want a traditional advisor. If you're somewhere in the middle, then I'd say either a hybrid robo advisor or maybe a fee-only financial planner would work for you. So you could do a robo advisor and then pay an hourly fee, or you could go with a lower fee robo advisor like a Betterment or one of the Personal Capital, or Wells Fargo also offers financial advisors, one of the hybrid. So it's really up to you. First step, figure out what you want, what's important to you. If you choose a robo-advisor, take our quiz. We'll put a link below. That'll help you narrow down which robo-advisor is best for you. Also, sign up for our free robo-advisor comparison chart. That will help you as well. Retirely will help you pick a financial advisor. I'll put links below. If you do sign up for one of the links, through one of the links that is marked affiliate, our company will get a small commission that will help pay for this channel. Thank you so much for coming by. If you have any questions, leave them in the comments below. Please be aware, this is for your information only. I'm not a licensed financial planner, and please do your own due diligence and research. Bye.